Crypto markets have always been a roller coaster. From explosive bull runs to devastating crashes, the world of cryptocurrency never sits still. But here we are in 2025, and many people are still asking the same question they have been asking since the early days of Bitcoin: is crypto still safe? The landscape has shifted, the players have evolved, and the risks have changed form. What once was a wild west of innovation and speculation has begun to stabilize, but that does not mean it is entirely without danger. In this video, we are going to break down what the markets are showing in 2025 and whether or not putting your money into crypto is still a smart idea or a ticking time bomb. Let us start with the basics. In 2025, the global crypto market has reached a level of maturity that was almost unimaginable a few years ago. Governments are no longer simply observing from the sidelines. Regulatory bodies in major economies like the United States, the European Union, and parts of Asia have now created extensive frameworks for how crypto should be taxed, traded, and reported. On one hand, this has led to greater transparency and reduced the risks of outright scams. On the other hand, it has introduced a new layer of complexity. For investors, these regulatory shifts signal legitimacy, but they also create barriers to entry for casual speculators. The days of easily flipping coins for a quick 10x gain are becoming fewer and farther between. The rise of central bank digital currencies is another development shaping the crypto landscape. Governments around the world have launched or are piloting their own digital currencies. This has had a mixed effect on decentralized cryptocurrencies like Bitcoin and Ethereum. Some analysts believe that CBDCs are a threat to privacy-focused decentralized assets. Others argue they serve to educate the public about digital assets, inadvertently pushing more people toward traditional cryptocurrencies. In 2025, we are seeing a blend of both effects. People are using CBDCs for everyday transactions while viewing Bitcoin and similar assets as long-term stores of value. This shift is influencing market behavior, pushing crypto toward a role more like digital gold than everyday currency. Another major trend this year is the explosive integration of artificial intelligence into crypto analysis and trading. AI-driven trading bots, sentiment analyzers, and prediction models are now widely available, even to average retail investors. Platforms powered by machine learning are helping people make more informed decisions based on market sentiment, technical indicators, and macroeconomic trends. This innovation has brought a sense of sophistication to what was once considered an unpredictable gamble. But here is the twist: AI is not flawless. When everyone is using similar models, it can lead to herd behavior. This amplifies volatility during major events rather than mitigating it. So while AI might help you make better decisions, it can also mislead you if you rely on it blindly. Let us take a closer look at Bitcoin itself. In 2025, Bitcoin has reclaimed much of the trust it lost during the last bear market. Institutional investors continue to hold significant positions, and the recent Bitcoin halving earlier this year has reignited interest from both retail and institutional players. Prices have seen strong recovery and moderate growth, largely driven by supply-side tightening and increased use cases for holding BTC as a hedge against inflation. Yet, skeptics argue that Bitcoin is becoming too correlated with traditional markets, reducing its value as a true diversification tool. If the stock market crashes, Bitcoin often dips alongside it, so the myth that Bitcoin is a non-correlated asset is being tested in real time. This evolving dynamic is crucial for anyone considering Bitcoin as a long-term investment. Ethereum, on the other hand, has continued evolving post-merge. With its transition to proof of stake now fully optimized, Ethereum is more energy efficient than ever. The network is processing thousands of transactions per second through Layer 2 solutions, and decentralized finance is booming again. What is new in 2025 is the rise of real-world asset tokenization. This means physical assets like real estate, art, and even equity in private companies are being turned into digital tokens on Ethereum and similar networks. This development is creating a new layer of legitimacy and utility for crypto. It is not just about coins anymore. It is about ownership, liquidity, and transparency at a global scale. However, this innovation also attracts regulation, and the gray areas are numerous. Whether this trend leads to long-term stability or legal chaos is still unclear. By now, you might be thinking, this sounds like progress. So why are people still unsure whether crypto is safe? The answer lies in cybersecurity and exchange stability. Despite progress, crypto platforms continue to face attacks, both internal and external. Just this year, a major decentralized exchange was exploited for nearly $300 million due to a smart contract vulnerability. Centralized exchanges have improved security protocols, but they are not invincible either. Account takeovers, phishing attacks, and rug pulls still exist. Moreover, decentralized platforms offer little to no recourse for victims. This means that while technology has advanced, the risk profile remains steep for anyone who does not take personal security seriously. Storing crypto in a hot wallet without proper backups or using unknown protocols remains extremely dangerous. Now, let us talk about the rise of stablecoins. In 2025, stablecoins are no longer niche instruments. They are foundational to the crypto ecosystem, especially for cross-border payments and DeFi protocols. Tether, USDC, and new government-backed options are used widely, with billions of dollars flowing through stablecoin networks daily. They offer the speed and efficiency of crypto without the volatility, but even stablecoins are not risk-free. The underlying assets backing some of these coins are still a mystery to many, and any shock to their stability could have ripple effects across the market. If a widely used stablecoin depegs, it could lead to a liquidity crisis in DeFi platforms that rely on it. Hence, investors should be careful not to treat stablecoins as equivalent to fiat cash in a traditional bank. It is time to ask yourself an important question: why are you investing in crypto? If your goal is quick wealth, then the crypto market remains as treacherous as ever. But if your objective is long-term exposure to a transformative technology, 2025 offers more mature and credible paths than ever before. Projects related to blockchain infrastructure, cross-border payments, digital identity, and smart contracts are attracting major venture capital funding and government interest. Some of these ecosystems might end up being the Googles and Apples of the decentralized era. However, finding them requires diligence, patience, and skepticism. Blindly chasing trends without understanding fundamentals is a recipe for disaster. This brings us to NFTs, which are undergoing a surprising evolution. The 2021 hype has long since faded, but NFTs are finding new utility in areas like ticketing, identity verification, and intellectual property management. Musicians, game developers, and filmmakers are using NFTs to give fans exclusive access to content, experiences, and royalties. This is shifting NFTs from digital collectibles to functional assets. If the infrastructure around them continues to improve, NFTs could represent a new form of digital ownership. Yet, the space is still full of speculative garbage. Most NFT projects have no liquidity and no intrinsic value. As an investor, separating utility from hype is key. Before we wrap up, let me leave you with one striking thought. Imagine telling someone 10 years ago that their retirement plan might include crypto. That reality is already here. Major retirement funds now offer Bitcoin and Ethereum exposure, and digital asset funds are gaining traction with older investors. Whether you are 25 or 65, crypto is no longer a fringe idea, it is part of the mainstream conversation. But with that acceptance comes responsibility. You must understand the risks, the trends, and the underlying technology if you want to navigate this world safely. So, is crypto still safe in 2025? The answer is complex. It is safer than it was, but it is not without risk. The tools are better, the institutions are stronger, and the opportunities are real. But the volatility, the scams, and the uncertainties still linger. Your safety in the crypto market depends not on the market itself, but on how wisely you engage with it. If you found this deep dive helpful, be sure to check out our next video where we explore the top 5 crypto projects quietly dominating the future, ones that most people have never even heard of.